Hello traders, Akil Stokes here, and welcome to another edition of the Forex Market Preview. If this is your first time watching me, this is a weekly video that I produce here for our Trade Empowered YouTube page, where I try to show you at least one trading opportunity or a few trading opportunities that are on my radar for the week ahead, and try to throw in some educational content in there as well. Now, this week's gonna be a little bit different. Obviously, you're not seeing my beautiful face to start things off. Had a long weekend, just came in off the road, and I've got daddy duty all day today. So I'm trying to kick this thing out as quick as possible. That way I can still deliver you guys content and still fulfill my daddily responsibilities. Daddily, it's a great word. Who knows? It may be better. We'll see. The numbers may rise without seeing my ugly mug. But anyway, before we get into the charts, I want to start off by just keeping you guys updated on how my trading has gone. If you haven't been a follower for that long, if you scroll down underneath this YouTube channel, there's a playlist that says Akil Stokes. Or if you're a subscriber to my personal YouTube page, you've noticed that I've been doing something this year called the trading blog. And it's kind of getting back to my roots as being someone that is really documenting his journey as a Forex trader. This is something that I started a long time ago before I was good. And that's what kind of got me into education. And I want to continue that, especially with the different perspectives and the different lessons that I have learned once I have become a consistently profitable trader. So if you haven't been tuning in, make sure you go over and check those out. They're almost daily videos. They're short, they're sweet, and give you a few educational tips on the way. But if you have been following them, if you are a member of the live room or the Syndicate, you know that this was a very rough start to the year. I came into January like everyone else. New year, fresh slate. We had a very nice year last year. Time to put that behind us and let's try to do better. And started off completely nosediving. I think for the first 2 weeks of trading, I think I won about 6 out of 21 trades. You can do the math on what percentage that is. I know it's bad. And it brought up some pretty good lessons about dealing with adversity and going through drawdowns, and a lot of psychological and emotional lessons were brought up during that time, which is good. It stinks that I'm losing money, but it's good because it's something that everyone will go through. So it's good to know how to trade through it, how to grind through it. And fortunately, the last 2 weeks have been pretty good. We've been able to steady the ship, turn things around. I think the last 2 weeks I've been about 8-4-11, so about 8 wins and 3 losses. And we're starting to turn the ship around and get things back on track for the year, which is pretty cool. So I talked about this in the live room. And there are a lot of people that you see that time and you initially bail, whether it's on following us or whether it's you're going through it yourself, you bail on your strategy and you don't realize, hey, it's the first 2 weeks of the year. We have 11 and a half months left, or 11 months left now. There's plenty of time to turn things around. Drawdowns come. We don't know when they come. We don't know how they come, but they do. And the difference between a failing trader and a successful trader is the one that is able to trade through them and see or be rewarded for their patience and discipline. But let's head over to the charts. There are 2 opportunities I want to talk about today. The first is going to be on the euro yen. We're going to start on the daily chart. Now, this is one of the trades that is in my trading portfolio, meaning it's one of the trades that we look at every day in the live room. It's one of the trades that I will share ideas with in our Syndicate program. And overall, it's been like this with a few yen pairs, and it could be for you guys that follow fundamentals, there's the whole situation that's happening with the new Trump administration and the yen and dollar weakness versus yen strength being the safe haven and all that nonsense. But it's been really hard to get a read on what the market's doing. We're kind of in a neutral perspective when I go through my IPDE. Yes, we've come down and we've kind of broken out of this wedge formation here to the upside, but then we've kind of just consolidated. We broke to the downside. I really have no reason to believe that the market is going to go higher versus going lower. And typically in trading situations like that, I choose to play the sideline and just wait until the market gives me a clear view on what I think will happen. That way that I don't like putting my money at risk in a gambling scenario where it's one's like, it might happen, let's throw some money on there. No, I only want to put my money at risk when I feel I have the edge in the market, when I feel I have the best opportunity to get a winning trade and make a return on my investment. So if we go down to the 4-hour chart here, here's what I'm seeing. Again, the market has recently come out of consolidation. We've essentially moved sideways. You can see our highs up here. Hopefully the screen is showing up well. You can see our highs up here. You can see our lows right there. We kind of just chopped. And then we broke out to the downside. Now, typically this would be a situation where you say, hey, we're going to look for the breakout, the retest, and the continuation down. However, once again, if we go up to our daily chart, I can just show you right here. Well, we'll go to the daily. It's a little clearer. We do have this area right here that concerns me on the daily. This was an area that the market had probed before, and we've got rejected right back up. So essentially that tells me that there's no reason, I have no reason to believe that the market is once again going to touch this level or all the way down here. We can easily reverse anywhere in this area. So again, it's just been difficult to get a read. Now, if there is one area that gives me interest, it would be a retest of previous structure highs. So a retest of this resistance level up here. And if we take our line tool, let's get rid of some of this. All right. If we take our line tool of the most recent move, you'll see that we'll be setting up a 1-to-1 measured move to that level. So if I take my line tool from my lows right here, right, 120.54, swing low to swing high. I'm going to change this color to make it more user friendly. Right? And if I copy and paste that move, meaning we get a 1-to-1 measured move, an equal measured move, boom, that's going to take me right up to these highs about 123.51. Now, it's not exactly at the highest point, but it's in that zone, and that's how markets work in zones. Now, if I want to add some Fibonacci confluence to that, if I want to see if there's a Fibonacci level that lines up with that, I'm going to take my Fibonacci extension tool. I'm going to drag it from this same area. This is going to be called an ABCD pattern, by the way. I can go and draw this on for you. What am I doing here? Here we go. Come on. There we go. Remember, there is no live trading room today. A. Right. Boom. We got, come on, baby. We got B. We got C. And we would be looking for a potential decompletion up in this area. So A, B, the retracement is C. This would be our D leg. And if I take my Fibonacci extension tool and drag it from the A leg to the B leg and back down, you'll see that we're going to have a 127 Fibonacci extension level line up essentially with that 1-to-1 measured move. Again, it's a little bit off, guys, but the market moves in, market works in zones. It's not always going to be an exact hit. So right now I've got structure looking left. I've got an AB equals CD pattern up here. I've got Fibonacci confluence. And for you guys that are familiar with advanced pattern formations, if I were to do something like this and just look at the initial leg of this move down, this is also going to give me what we call an advanced Gartley formation. That looks like this. You've probably seen it before. It's going to look like X to A to B, B to C, C to D right in this area. So we have an advanced pattern formation lining up with our structure highs. Not a bad way to look for a short opportunity. So I do have orders on here. Price action did not get there Monday, but we'll see if we can get there either Sunday on the open or early this week and look for a short opportunity. Now, following up on last week's video, and last week was like, oh man, so many great comments off of last week's video. Last week's Forex market preview was called, I think it was Taking Smarter Profits, and we talked about kind of knowing the different trades you're in and what you can expect to get out of it. You know, don't take this trade and expect to get a million pips, or, you know, if you want a million pips, you got to take this type of trade, and basically allowing yourself to put yourself in profit positions that have a better chance of being hit. And Jason Greystone did a video as well on the Trade Empowered site here, or Trade Empowered YouTube page here, talking about how he would use advanced pattern formations as entry reasons for trend continuation trades. And that's a cool little deal that we do in our live rooms a lot. This will be the exact opposite. In this type of move, I'm not looking for a trend continuation trade. So I wouldn't be looking to take this advanced pattern formation and expect to move all the way down to here, right? Because again, I have no idea what this pair is doing. I don't really have a bullish bias. I don't really have a bearish bias. So if I do enter a trade, I want to be conservative. I want to get in. I want to get out. And again, just wait for the next valid opportunity. So a move like this, I'd only be looking for targets, traditional targets right back around this 2250s level. So a very, very small retracement back into this B leg is what I'd be looking for targets. Now stops, with advanced pattern formation, stops need to be above the X leg. So let's say we enter right here at the 127 aggressively with a sell limit order for you guys that get upset because you don't tell us how to enter the trade. Inside joke for you guys that have been following and reading the comments. We have this this trader that likes to comment on our videos that says the weirdest things. This is a little inside joke for him to hopefully appease him. But if we're looking at a sell limit order right here at the 127 extension, we know that stops need to be above our X leg, which is right up here at 123.71. Now, getting right above the X leg right here would give us the optimal risk reward. It looks amazing. It's probably 3, 4, 5 to 1, almost 6 to 1. But what do you think the problem is here? And I'm going to put a poll question in the top right hand corner. So pause the tape or do whatever you have to do, but answer the poll question, please. Why do you think this would not be a good level for stops, even though the risk reward is tremendous? What do you think? Top right corner, poll question. Buying time for you to answer. Would sing you a song, but it's early and my voice is scratchy. Right? Well, look left. Although this is our X leg, and I'll go ahead and draw some horizontal lines out. Although our X leg is right here, right? We've also got a structure high right directly to the left of it here, and another structure high to the left of it here. And one thing that I tell the traders I work with a lot is when you get these situations, and typically they're a little bit different, where you have multiple levels of resistance or multiple levels of support, typically the one you want to avoid is going to be the highest one, because the market knows that many rookie traders like to hide stops right above these little levels, and you can see these spikes. It will spike up and get you, right? The market will play that trick on you. I'm actually going to be putting out a video later this week of some live room footage that we use talking about how the market will trick you during news events, which is pretty cool. So if you want to put a stop loss on here, my advice, obviously you can do whatever you want. It's your money. Risk it how you may. My advice is to get your stop loss above this level of structure right here, above these structure highs at 24.09, and you can still get a really decent risk reward, still better than a 1-to-1. So that's what I'm looking at on Euro Yen. The next pair I want to take a look at is gold, and it's a similar situation, talking about price action coming back into structure, but slightly different. Overall picture is slightly different. So let's head over to the gold chart next. All right, so we're on gold on the weekly, and this is going to be familiar for many of you guys, Syndicate members. We talked about this a few weeks ago when we were kind of in our structure deal, looking for structure-based retracements. But let's take a look at gold weekly and just kind of the recent moves that the market has made, right? We have our bottom right down here. Boom. The market has come up. We've kind of consolidated, chopped around at this level, right? Boom, support, and then boom, we've exploded off of that level. We've come down, we've blown right through that level of support. Once support is broken, it becomes what? I'll put another poll question in the top right-hand corner. Once support is broken, it becomes what? Or potentially becomes what, since we never technically know. Yep, resistance. And you can see price action has come right back into that resistance level. Look left, structure leaves clues, setting up for a decent trend continuation opportunity to the downside. Now, as we go down to the lower time frame, we're gonna have a slightly different picture, because there's something to be cautious about right here. One of the things that we talk about a lot in our training is just because it's a good setup for a trade right? This is a good area. Previous support has turned to resistance. Doesn't necessarily make it a good trade. There are a few things you need to take into account. Like, again, where can I take profits at? Let's say I'm taking profits right back at previous structure lows. Well, where do stops have to be? Well, in a situation like this, unless you're using a very aggressive stop loss, right? If you're a structure-based stop loss taker, right, you've probably got to have stop losses up here. So that doesn't necessarily make it a good trading opportunity, right? Your risk is well outweighing your reward. And you don't want to put yourself, well, in my opinion, you don't want to put yourself in this situation unless you have an extremely high win percentage. So one of the things you want to do is you want to identify your level. You want to identify the zone that you're looking at for a potential trade. And then you want to go flip through your trading plan, right? Flip through what you can trade, flip to rules of engagement and see what type of different entry reasons am I allowed to use. And if we go down to the 4 hour, 4 hour, you're going to see that price action has come down to this level. Again, here's the level we looked at on the weekly. I draw a straight line right in here, right? You can see price action has come to this level. We have then double topped at this level, meaning price action has come up to it. We've retraced off of it. Boom, boom, giving us a double top. Now, for many traders, that was a short opportunity. They saw the initial test, RSI, our relative strength index, was overbought, right? We came up, we retested it. You can see we showed bearish divergence on the RSI. So the RSI is pointing down. We have lower highs on the RSI, equal highs on our price chart. Boom, pulled the trigger, took a short, probably hit some targets, depending on how far they're shooting for potential targets on this trading opportunity. Looks like we came to a 382. If they're using fibs, ooh, just hit it. Mwah, just kissed that level. So maybe hit some targets on here. Again, all depending on what they're looking for out of the trade. But let's say you were a trader that is a little bit more conservative. You needed a little bit more than just a double top to enter the trade. Well, this is where the 2618 trading technique would come in handy. Again, you have the break and close below your V point here, your trough, I think you guys told me to call it a few videos ago. And what you would look for is a move back up into your 618 retracement. So taking your Fibonacci retracement tool, taking it from your swing high right here of your double top, dragging it towards previous swing lows, and you're looking at a zone. You're saying if price action comes back, and again, depends on how you're trading it. There's different ways to do it. Taking structure into account, actually, at this 382 is a very good way to do it, but we'll stick to the traditional way by the book. You draw a zone between your 618 and your highs here, and this is where you're looking to enter the trade, either aggressively right at the 618, either looking for an entry reason once price action equals your kill zone. For you guys that are more structured traders, however, keep an eye out on this 382 level as well, right? This is not going to be a bad level to look for a test as well. I like structure, so I always kind of keep an eye out for that as well. But same principles kind of as the euro yen. The market has not really consolidated, but the market has paused a little bit, created some highs, and we're looking for a retest back in the structure for a chance to get involved in a short. However, in this situation, unlike the euro yen, the opportunity to gain or to go for a little bit more in profit is certainly there, as the overall direction of the market is kind of in our favor, or is in line with our analysis, and that's very important. So I hope you guys enjoyed this video. Do me a favor. I've been saying this for the last few weeks, but there's only a few days left. I'll put a link in the description box, so scroll down under the YouTube video and take a look at it. But I've been nominated for Forex Trainer of the Year. You guys can vote once per day, I believe, per computer or per cell phone, something like that. Please go over there and lend me your vote. Voting closes on January 31st. I think the results will be announced on February 5th, something like that. It says it on the site, but I'd appreciate your vote. It'd be pretty cool to bring that award home for the team. And if you want to know more about the 2618, guys, go over to our website. I'll go ahead and bring it up for you guys. TradeEmpowered.com, right? www.tradeempowered.com. click this Learn to Trade tab up here. I've been getting a lot of questions about Live Room and Syndicate. It's right here on the website, guys, right? Live Rooms, Syndicate, right? It's right there. Do a little browsing before shooting me a tweet or email. But click that Learn to Trade tab, right? And make sure you can scroll down. Make sure you sign up. Again, we do have a free training event coming up very soon, and you do not want to miss it. Trust me, it will not be recorded. So you want to get there. So make sure your email is in here. But scroll down and go to the 2618 strategy, and it teaches you how to do the trade that we just talked about on gold dollar. So until next time, guys, plan your trade, trade your plan. Good luck in the markets this week. And I appreciate it, again, each time you guys share this video, each time you guys hit that like button, each time you guys leave a comment, and of course, if you're new, each time you subscribe. Have a good one.